Oh man, so has the pain for Bitcoin just started, or are we now due for a relief rally? That is what we're going to analyze in this video. We've got a bunch of Tether FUD to look at. We've got the latest comments from Gary Gensler and a whole lot more. So make sure you hit up the like button. Don't forget to subscribe. As always, these videos are brought to you by BitGet. So yes, if you want to get traded on any of these exchanges, go ahead and check out BitGet. No KYC, no VPN needed. Even if you're in the States, you guys can get yourself set up on BitGet. Now, let's take a look at this head and shoulders pattern, which we've been looking at for a while. A lot of people said this was invalidated, but what we're seeing here is we're seeing a little bit of a bounce here to see whether we can get another move here on this head and shoulders pattern. Remember the key level, we've got two key levels to look at. One is if you lose this diagonal neckline, then the pattern is invalidated. Two is if we get above 21,700, at that point you can scale in your trade and things are looking better for us to start heading towards our price target of 26. Now, don't let that get you confused, right? This is a short-term pattern, but I want to zoom out now and remind you of what the bigger pattern is at play here. And if I zoom out to the daily, you will see here, I shared this wedge with you yesterday. This is the wedge we're in. So don't ever forget the broader pattern that we're in. The broader pattern that we're in is characterized by bears being in control. You can't deny that. What I just shared with you was a microcosm of what's in here. Now, what you can see is within this big falling wedge, which obviously we hope eventually breaks to the upside, because when it does, we can start heading back towards the high at 48K. But we'll analyze whether we're ready for that yet. But what we are seeing is we're in this microcosm just in here. And in that pattern, let's just go down to the 4-hourly just to take a look at what's happening. We are in this bear flag. Now, the majority of the time during this whole pattern to the downside, you have extended moves by the bears. They call off for a little bit, they regroup, and they push Bitcoin down. They call off for a little bit, they regroup, they push Bitcoin down, and now we're seeing the same here. The question, however, is when will we get our fall to the downside? Will it happen straight away now? Or will we get a little bit of a rally up towards maybe 24, 25, 26, which is from that head and shoulders pattern, before we touch maybe the top of here and either break out, or then the bears continue their move to the next low. And the next low could be 16, 15, those kind of levels. And we'll probably look into that in a deeper video later on today, when I will be posting a deep analysis onto some of the latest on-chain metrics and where they identify a potential Bitcoin low. Because the reality is, if you look at the on-chain metrics here, I shared this with you guys yesterday, the Maya multiple, which is the deviations from your 200-day moving average, okay, which is an indication of how often and for how long are you below your 200-day moving average, is now forming this pattern which we've never seen before. It's now lower than the previous downturn's low, okay? So the previous downturn here, the 2018-29 bear market, the Maya multiple was 0.5. We're now sitting at 0.47. The first time it's been lower. If you go back to the 2015 market, it was 0.39. If you go back to 2012, it was 0.22. It's the first time it was lower. This normally gets better and better, and that is why we're seeing a little bit of a downturn. And some people saying, hang on a second, maybe the drawdown has more to go, right? If we take a look here, these are the drawdowns we've seen from all-time high for every single of the key bear markets. And you can see in 2015, we fell 75% to 80%, okay? And with the max of 83.8 here in towards January 15. We then saw in the 2018 bear, we fell from 79% to up to a max of 84% from all-time highs. In the COVID crash, we'll ignore this one, but that was 74%. And we saw a bunch of money printing coming thereafter. Currently, we're at 73%. Now, the argument can stem that Bitcoin is far more a mature asset class. Therefore, we don't need the same level of retracements. But the evidence doesn't support that, right? The last two major bear markets saw 84% and 84% here as well. So the argument can be had that we could see a bit more pain. And we'll go into that in detail later on today with the on-chain metrics. But what I want to spend today doing is looking at some of the key headlines. And the first one I want to take a look at with you guys is this one. SEC Chair Gary Gensler affirms Bitcoin is a commodity. That's the only one I'm going to say. So this has got a bunch of people in a bit of a hoo-ha because he didn't mention Ethereum. And it's interesting. This is going to be a common theme we need to monitor over the next kind of year or two as the US decides on its regulation plan and what they want to do. Remember, They're going to decide which assets would need to be monitored by the SEC and which one will be overlooked by the CFTC if it's deemed a commodity. Okay, now he's saying Bitcoin is the only one that he's going to say, which has got some people a little bit concerned about Ethereum, but I wouldn't read too much into that just yet. We can also see this was a very interesting piece of insight I wanted to share with you guys, which is skepticism. This graph shows you the percentage of people by a survey they've done in each country based on whether they're optimistic or skeptical about Bitcoin. Okay, and what you can see here very interestingly is there's a bit of a trend. You can see that mainly a lot of the let's call them the first world countries, right? We can call these first world countries like the Western countries, United States, Australia, United Kingdom. They have a high level of skepticism towards cryptocurrency. I mean, nearly 40% in Australia skeptical, 36% in the US, and United Kingdom 35%. And Germany 40%, right? Canada 37%, 41% in Japan. But then if you look at other countries which have suffered more from an inflation perspective and understand the benefits that cryptocurrency can bring, they are far more optimistic. If you look at places like Nigeria, 60%, okay? India, 58%, 56% for Vietnam, Argentina, South Africa, over 50%, very optimistic about cryptocurrencies. And this gives you the idea, this reminds you that sometimes when we're sat in these Western countries, we may forget the power of Bitcoin specifically and why many countries don't just invest in it for, for speculation or to make money, but they actually need it. Some currencies out there are getting wrecked. I mean, even the US dollar is getting wrecked recently. So what do you expect for some of these third world countries? They're finding it very, very hard right now. And those people have nothing to do but to turn to crypto as their savior, as their hope. Also, let's take a quick update on Solend, right? We covered a video. If you haven't watched that, I'll link that up. Solend, the second biggest DeFi platform on Solana, was almost wrecked, right? We covered it off where a whale was getting liquidated. They tried to reach out to the whale. They couldn't. And they were worried this could bring down the whole of the Solana network. Really big crisis that was playing out last week. And in the end, they managed to get this whale, but only thanks to Binance reaching out. Yes, Binance eventually reached out, managed to get the attention of the whale, and that was the reason they were able to get him to slowly start unwinding his position. But the reality is, a lot of the damage has been done, particularly for Solend. Don't forget, go watch the video to see the breakdown of exactly what happened, but they actually voted emergency proposals through to allow them to go in and liquidate the whale themselves. This is an insane break of these rights we have, right? That's insane that they can set such a precedent, and some of that damage has been done indeed. Now, they did go ahead and try to invoke some of that, to revoke some of that with their second governor's proposal. You can watch everything that happened in this video that I would have linked up. Keeping things moving, I updated you guys yesterday about Harmony attacker who stole up to $100 million from their Horizon Bridge. Now remember, the Horizon Bridge allows you to move assets from Ethereum, from Binance Smart Chain across to Harmony 1, the layer 1, and that was hacked. And this is always a trend, guys. I'm going to make another video about this at some point with you guys, but bridges are really dangerous. So be very, very careful when you're using bridges. They are a target point for hackers because you're neither in one blockchain nor the other, and they can attack the bridge, which often has security weaknesses, to say the least. Now, the interesting update here is you're now seeing $44 million of that $100 now being moved. Remember, the beauty of cryptocurrency is that you can track this, okay? So when nefarious actors, when bad actors steal money, the benefit from traditional finance is you can track the money. Now, what happens is if you look at traditional finance, if you were to steal money, once the act of the hack has happened, you can't track that money, right? You can't track US dollars or cash as it's moving around. It's very easy to launder it and it's gone. The hack is done. That 100 million is lost. With crypto, we have seen examples like with the Polygon Matic attack where funds are returned oftentimes. But in this case, it looks like whoever the felon is, they're trying their best to take the money. So they've taken 44 million. And what they've done is they've moved it using something called Tornado Cash, okay? Now, Tornado Cash is a privacy service, and what it does is basically mixes all the wallets and the money, and therefore nobody knows which is the stolen Bitcoin, which is real Bitcoin. It mixes it all up and then you can take it because it delinks all the wallet addresses. So interesting update there in terms of that hack, and Harmony said they've got the FBI involved to help them track down what's going on, as well as 2 blockchain tracing and analysis firms. So keep you updated on any updates there. Now, the next big theme I want to discuss with you guys is Tether. Now, Tether FUD has been spreading everywhere, right? What's going on with Tether? We saw their CTO post a thread on Twitter saying funds are targeting them. They're being targeted. And we can see that if we head on over to the charts, we can see that the redemptions have taken an all-time high, right? We take the weekly chart here because you won't be able to see it clearly otherwise. These are the redemptions here on Tether. Now, let's get zoomed in. And what I want to show you is this recent drop here. So you can see, whoops. You can see that initially the market cap of Tether was sitting here as high on this weekly candle as 82 billion. Now you're sitting at closer to 66 billion. So they faced a 20% drawdown or redemptions in the market cap of Tether. Now, to be completely fair to Tether, and their CTO Paolo also tweeted this, they've never failed a redemption, which is very good. And this is a hugely positive stress test, let's call it, for Tether. So they have achieved that. But I still hold my reservations. I'm going to make a separate video later on today going through the pros and cons of the different stablecoins. Should you be in USDC? Should you be in Tether? Should you be in BUSD? DAI? It's very tricky to navigate this. I'm going to give you my views on how you should be thinking about stablecoins, wrapped assets, and also should you be trying to seek yields in this market, and if so, how and where, right? What should you be doing with your tokens whilst you're waiting through this bear market? So there's a whole bunch of this, and you can go ahead and read this tweet, the tweet thread by Paolo Ardino, but basically what he's trying to say is people are trying to attack him, and what they're trying to do, according to him, is they think let's read this tweet here. They believe that Tether was not 100% backed. They believe that Tether had exposure to Evergrande. They believe that Tether had 85 exposure to Chinese Communist Party. They believe Tether had issued tokens from thin air. They believe that lenders were borrowing from Tether without overrides capitalization. So there's a whole bunch of things here. But the key message I want to give you, and we spoke about this yesterday, was there are coordinated attacks. Whether it's Celsius, whether it's BlockFi, whether it's Voyager, and now Tether FUD, there will be coordinated attacks. But it doesn't mean that these platforms aren't making mistakes. The ones I listed, Celsius, BlockFi, Voyager, Tether, there's a reason they're being targeted by these big players. And these are the same things we've seen in traditional finance time and time again. If you've been built off poor foundations, which you get away with in the bull market. In September last year, I was talking about the weaknesses in Tether in terms of their lack of collateralization. Now, maybe they've improved that, and that is why they're coping through this bear market, and hopefully they don't have an issue. I don't want to see the crypto market crash, but there's a reason funds will spend billions or hundreds of millions attacking certain projects because they think they can get quick billions. Right? And that is why it happens. So we need to understand that this is what's happening in the market right now. Weak companies are getting exploited. They're getting attacked because of their own greed, right? We saw Celsius, degen plays. Let's be honest. We saw 3 Arrows Capital, completely degenerative plays. BlockFi, Voyager took huge risks, right? Given unsecured loans of that size with such misallocation where majority of their debt was given to 3 Arrows Capital. So bad practices plus a little bit of attacking, right, from these, let's face it, billionaires who want to make a quick buck, equals companies getting wrecked. Now, what I don't want to see is user funds getting destroyed, which is why I'm going to post that video later on explaining exactly what I would be doing in this market to protect your funds. Now, coming back to what am I doing? I mean, the main thing I'm doing right now is because of all these attacks going on, I don't feel comfortable investing anywhere right now. I'm not buying any altcoins. I'm only dollar cost averaging into Bitcoin and Ethereum. I've been saying that for quite a while now. So hopefully you guys are understanding why I'm doing that and why I'm not loading into altcoins, particularly where I'm expecting more of a potential retracement to the downside. Again, I'm going to be sharing that later on today with the on-chain metrics. Now, just to wrap things up here on Bitcoin, I do want to remind you guys of where we're at. And if I come onto a clean chart, a weekly chart, and I bring out the 200 moving average, I just want to remind you of this exact fact. And hopefully this puts things into a little bit of perspective. I'm just going to put on the log chart. And what you'll be able to see here from here is every time we've managed to bounce from our 200-week moving average. Now, during the COVID crash, we actually wicked below. We wicked below, but you can see the following week was a green week, which took us and closed back high, and then we went on the bull run. Now, what we're seeing in this situation is we've closed below this week here. The next week was also below, and now the third week is below. So we've not received a bullish engulfing candle immediately after suggesting we can go on a massive run. This is what's preparing me for more potential downside. I know it sounds horrible, but think about it. When the COVID crash happened here, what was this whole period all about? This whole period, the government was on your side. The Fed were your friends, okay? Your Fed were your friends in this moment. Things were really, really positive. We can go ahead and put a smiley face there. But what's the situation here? What's the situation here? The situation here is the complete opposite. We've only just started with the Fed not being your friends. Right? We've just started with the Fed not being your friend. They're not printing. In fact, they're doing the opposite. They're doing quantitative tightening. Interest rates are being increased. So how can we suspect straight away a massive move like we saw here? I mean, that's just, it's illogical to expect that when the Fed wants more pain in the markets, okay? So we need to understand and be prepared for that potential move to the downside, because the reality is the Fed is not on our side right now, and the best we could hope for is a little bit of a consolidation period. I mean, maybe running up to 30 occasionally, coming back down, running up towards 30, 35, coming back down, that kind of a move before we can expect our next push to all-time high. So I'm going to go into that in detail later on with a bunch of on-chain metrics. So make sure you've hit the notification bell, you make sure you subscribe to go through that. Also going to post a video on stablecoins, so look out for those 2 specific videos today. Again, guys, if you're looking to dollar cost average into Bitcoin or Ethereum, you can do so using BitGet, who support the channel. Links in description to my affiliate link, which obviously supports the channel. Apart from that, thank you for watching. Hope to see you in the next one. Go and watch this video, and I'll see you in the next one.